What is going on, everybody? TG here. We are back with another video. Today we're going to be talking about Alibaba and Amazon and why I am risking over $50,000 on Amazon and about $20,000 on Baba. About to be a lot more tomorrow when I sell a bunch of puts on it, since we are finally on the E-Trade platform. We've been having some issues with the transfer process, with the margin and buying power. We were at a huge Fed call the other day, up until about a couple hours ago. So we're trying to figure all that stuff out, but hopefully it's all fixed now. We can go ahead and get some long-term BABA puts sold and get a lot of premium for that, because we love both of these companies. And in total, we're going to be betting over $150,000 on the two of them. And I expect this to be a very, very profitable trade. Now, I want to break down each and every one of these and really show you guys what I like about all of them. Now, first off, Alibaba. Okay, we talk about Alibaba. I've talked about it a couple times. I like this company for a lot of different reasons. They actually just reported earnings about a month ago, and it was insane. Not a lot of people were talking about this, but on my birthday, they reported earnings. They did $22.03 per share. And the estimate was 19.25. So that's a huge top beat. And they also got a bottom line beat as well of revenue of 221 billion. That's in Chinese currency, by the way. 214 billion estimate. So again, a pretty big beat. Revenue up 36.9% year over year. So let's break down a couple of the fundamentals for Baba. Baba currently has a market capitalization of 613 billion with a PE ratio of only 25.5. That is a very low PE ratio for a big growth company. Now, let's talk about Amazon now, because we all know and love Amazon as well. Amazon's sitting at a $1.56 trillion market cap, so that's significantly bigger, and a PE ratio of 73.92, obviously much higher as well. But Amazon reported earnings about a month or so ago, not even about a month and a half ago, and it was probably the best earnings quarter in history. They did 125.5 billion in revenue, and they did 7.22 billion in net income. So obviously a big earnings beat. Earnings per share coming in at 14.08. Massive beat, massive growth, 43.6% year over year growth, and obviously a lot of cash on hand as well, 42 billion. So I wanted to break down a couple things. First off, I want to talk about the cloud, because the cloud for Amazon, their AWS, is huge. That's their big profit maker. We've seen some pretty good growth with that. They are the number one by a long shot. You clearly see they take about 33% of the market, and Alibaba's down there at around 5%, but they are continuing to grow and grow, and they are also the biggest one in China. Now, Microsoft has been catching up and has been doing pretty well, but as of right now, Amazon is the biggest and the best, and is continuing to get more and more clients under their belt. So obviously that's huge for both of these companies. They're both going to use these to continue to grow and make a lot of money off of it. And I expect to see more upside from each of them, considering the fact that Amazon has grown their cloud services about 33% year over year as well, which is also pretty big. Microsoft has a lot more year over year growth, but obviously on a less of a scale. But I like Microsoft as well. I think Microsoft is a great cloud provider, but I personally think Amazon is the best of the best. Another big thing is the e-commerce trend of going up and up. So this is for Alibaba. This is retail e-commerce sales in China from 2019 to 2024. As you guys can clearly see, we've seen significant growth in e-commerce. Obviously, with the pandemic really digitalizing things and making e-commerce just essential. To be honest with you, it's essential at this point. And people are going to be used to the comfort and how easy it is to order things and get it quick. And you're going to continue to see e-commerce just grow more and more and more. So obviously, as you guys can clearly see here, that's a lot of growth. That's a lot of growth for e-commerce and a lot of money being brought in from e-commerce. Now, we look at the same thing in the U.S. Retail e-commerce sales, same thing. A lot of growth coming in 2020, 800 million or billion in e-commerce sales. We plan to see much more growth. Some experts expecting even $1 billion by next year, if the trends continue. But this is a pretty conservative approach, thinking that it's only going to be a small small gain, which I think it'll be a lot bigger than what it is now. I think people are used to the way things are and they want to keep it that way. And people have gotten comfortable and contempt with ordering things online and getting it shipped to their house in 2 days rather than having to go out to a mall and buy it. You get better prices, you get more convenience, and a lot of times it's just so much easier to do. So I continue to see e-commerce being one of the driving factors in our digital economy that we have, and I continue to see Amazon being the number one go-to stock for that. I mean, we clearly see here people are still using this thing big. Last quarter doing 125.5 billion in revenue, and obviously, the majority of that coming from their e-commerce platform. So, big trends, and I expect to see over $1 trillion in e-commerce by next year. So, obviously, Amazon takes the largest market share of that, and they're going to continue to thrive because of that. So another thing I wanted to talk about was comparing the financials, because obviously financials and fundamentals do mean something. And as much as people say that financials don't, they do. Fundamentals mean a lot in a stock, especially when you're not talking about spec companies, you're talking about real companies. So let's break it down. So PE Ford right now, Baba's winning clearly. Baba has one of the reasons I absolutely love Baba is because it's almost a value play, honestly, with a PE ratio that low. It's almost a value play that has the growth potential and the growth abilities of it, which I absolutely love. So when you talk about valuation and what's more undervalued, it's Baba. It's clearly Baba's much undervalued than Amazon. But when you look at like price to sales and EV sales, it's Amazon. Amazon's taken the cake on that one pretty easily. They just do so much more sales and they just bring in so much more revenue. But it's not always about revenue. There's a lot of other metrics as well. And one of the things that really surprised me was the price to cash flow. Bob is actually beating Amazon in cash flow. That's crazy. So, you see something like that. And another one is price to book, what's closer to book value. Bob is very cheap. At a 4.41, that's very, very cheap. Revenue growth, Amazon does take the cake. Year-over-year growth, they're about 38%. Baba's at about 32%. So more year-over-year growth from Amazon. But that's why they have those higher multiples, those higher PE multiples. Revenue growth going forward, though, Baba does take the throne on that. So more forward-looking, Baba is going to grow a little bit more percent-wise than Amazon when you look at the 3-year and the 5-year. EBITDA growth year-over-year, Amazon significantly 33% over 8% for Baba, but obviously forward-looking, Baba is going to get above that by a little bit. But then when you go in the longer range from the 3-year of that, Amazon still got that going good. Net income as well for the 3-year, Amazon is going to do much more than Baba because they're doing much more revenue and they're cutting expenses and they're finding ways to continue to grow their profit margins. One of the biggest issues with Amazon is their profit margins. I mean, you look at it, it's a 5.75 profit margin. That's really freaking low. That's incredibly low. When you have something like Baba, that's sitting at like a 35% profit margin. So, just a big difference in that. But Amazon's continue growth as well, 53% year over year for that. And I expect that to be around 10% pretty soon. In about 2 years, that's at 10%. So then when you take, almost $1 trillion in revenue, which, eventually will happen. It will happen eventually where they will bring in almost $1 trillion in revenue. So that's going to be obviously significant, almost $100 billion in profit. They did 125 billion that quarter. They did 96 billion. Like they're consistently growing at a very fast rate, and they're on pace to do, I believe, about $500 billion minimum next year. So that'll be pretty huge. And I just expect more growth from that, more earnings per share, and different moats that they have that they're making money from. For Amazon, the big profit ones are AWS, obviously, and ads. That is another big thing that's happened is ads. Ad revenue has skyrocketed in the last earnings report, and I think we're going to continue to see trends of that going forward, and that being a driving factor in Amazon's profits, along with their free cash flow king Prime membership. Prime membership is going to continue to grow more and more members, over 100 million in the U.S. alone. and obviously a lot more year worldwide. And they're doing big initiatives right now to get more Prime members, such as trying to take over NFL stuff, and obviously the Italian soccer league as well. You have to be a Prime member to watch these things. So stuff like that is just another way of getting more Prime members and making people spend more on their company. It's pretty simple. It's genius. So another thing I wanted to look at was their net income margin. Obviously, Bob is taking the cake on that of almost 25% over Amazon's 5.5%. Now, obviously, when you look at it, you look at all these fundamentals. Baba seems like the pretty clear winner. They're taking the win in almost every single column that really matters. But don't use that only to say, all right, Baba's 100% better pick than Amazon, because I think that you want to own both of these. I'm going to be honest, you want to own both of these, and they're both expected to do extremely well. Another one I want to talk about is free cash flow. Free cash flow for companies is just insanely important, and both of these companies do an amazing job doing that. You have Amazon Prime is the biggest cash flow giant there is, for a free cash flow giant for Amazon. Quarter over quarter, these companies are bringing over 15 billion and a half for Amazon, 20.5 billion for Alibaba free cash flow. So these companies just have an insane amount of revenue and profit that they're bringing in. And the good news about Amazon is, while they have so much more revenue right now and their profits are a little low, those profit margins are going to increase over time, and it's only going to get bigger and bigger. So I think you want to own both of these. I really do. Another big thing when looking at companies is where they are forecasted to go in the next 12 months. Now, we're going to be comparing both Amazon and Alibaba and where analysts are expecting these companies to rise in the next 12 months. So let's start off with Amazon. 31 analysts have rated Amazon. 31 say buy. That's a strong buy. And 31 analysts come up with an average price target of 4,105, with the high on the street being 5,200 and the low on the street being 3,700. Even 3,700 from here is a significant upside of over almost 20% gain. Obviously, the highest being a significant gain of over about almost 50%, over 50% actually. But the average being about 33% upside from where the price currently is sitting now. Obviously, that's a big increase. You can get 33% on a stock. That's huge. My average price target for Amazon, or what I believe Amazon in the next year will be about $38.50. I just think right now, with everything that's happened, things are tough right now for Amazon. But I do see this thing going 4,800 by next January. That's what I'm saying, by next January. Obviously, by March, it could be in the 4,000, but I think by next January, this stock is going to be about 3,800, unless they stock split. And if they stock split, of course, you're going to see the stock, being over 4,000. A stock split would send this stock absolutely soaring. But I like Amazon. Amazon's my top pick, obviously, in my portfolio, as you guys know. And I see the stock hitting $4,000 in the next 12 months. Alibaba, average price target, 32.5. You have 19 analysts have rated it. 18 say buy, 1 say hold. So again, a very strong buy. Highest on the street being 395. Average on the street being 325, which is a 43.5% upside. And lowest on the street being 285, which is still a significant upside from where it is now at 226. So again, a lot of upside. I know analysts aren't always exactly accurate or even close sometimes. But the consensus is that it's pretty strong. People like this stock. People think the stock is going higher. And people are buying the stock because of that. It's better to find forecast price targets of Fortune 500 big companies, rather than spec companies, because they're basing these price targets on earnings and metrics and growth going forward. So I think either way, you can't go wrong with either of these stocks. I love them both. I'm betting big. Like I said, I got well over 100K invested into both of these. And I'm going to continue to add over time. I'm just going to continue to add more and more into these companies long term, because I love their business model so much, and I love the companies themselves. So you want to invest in something you use. I use Amazon. I think most of you guys in America use Amazon. And for China, it's the same thing. People are using these products. People are using their services, and it's growing at a significant rate. And I think they're undervalued at where they currently are. So Let me know what you guys think about these. Let me know what your favorite one is. But just remember to like and subscribe, and I'll talk to you guys in the next video. Have a wonderful day. Bye.